Myles, I want to pick it up on, and I want to get for our viewers, your thoughts in terms of where to invest and safe haven trades if there are. I mean, we talked about it being very difficult in terms of the investment climate. But I first want to ask you, many strategists and economists will say that, a recession is inevitable. But we've had recessions in the past that, maybe were short-lived, didn't infiltrate the entire economy. But there have been historically, many years where the recession, was just so broad-based. What do you think a recession would look like if and when we get one?
I think it depends on your country, Catherine.
Okay.
If you're talking about the US, so I worry about Canada. As we all know, household balance sheets are incredibly leveraged in Canada. The last time I looked was only about a week ago, and debt to disposable income for Canadian households hit a new record, an all-time new record. So we're a leveraged country. Our consumers are heavily leveraged, and I think that ultimately, if you're talking about recession here, it's because central banks are tightening interest rates, and housing is the most interest-sensitive sector in the economy, or one of the most interest-sensitive sectors in the economy. So I think a recession here could have a little different flavor than, say, in the US, where household balance sheets have definitely been delevered over the last 10 to 12 years, 15 years. Where they're looking in pretty good shape, the consumer. And so I think the recession would probably be a little more broad-based and deeper in Canada if that were to occur.
Interesting. So what sectors then, if we think for the next at least 5 months, and then going out a little bit further, where do you see at least some protection, or how are you advising your clients to invest and protect portfolios?
Yeah, so historically, when you look, the context of this, the magnitudes are always different, but the context or the dynamics inside the markets are very similar to what we've seen in past cycles, where you've seen growth begin to slow. In large part, people have moved, and this is kind of what we've been advising. People have moved towards dividend growth, companies with more reliable profitability streams, so more stable growing companies. So stability, income, those are at the top of the list. And a lot of the sectors that you expect are the usuals, like consumer staples, a lot of the healthcare sectors, utilities, and those are where you usually find better relative performance in environments where people get concerned about growth and there's actual visible signs that growth is slowing. And I guess the outlier in this cycle so far has been the energy sector, where I wouldn't call those companies generally the most stable growing companies, but yet they've caught a very healthy bid. They're one of the leading sectors over the last 6, 9, 12 months. And so there's a little bit of a difference going on there than in the past. I'm not saying that, we have taken a slight overweight position in energy, but energy, you got to live with the volatility. That's the issue with energy. I mean, point to point, you say it's up, 40, 50%, these stocks, but to get there, you've had to hang on to some wild rides. So sometimes that's very hard for people to stomach, right? But But energy is sort of the outlier in terms of going for stable growth, and then you have this sort of barbell with energy, and energy is had a lot of things going right. You've had underinvestment for years. You've had synchronized global growth, which now is slowing, so you have to be careful about that. And you've had obviously the geopolitics that have played into the energy sector, which have kept it propped up. So. Look, I think for the lion's share of most portfolios, you're thinking about high quality companies, solid balance sheets, not worried that much about interest rate risk, and stable earnings delivery.
Okay. I'm also curious as well in terms of outside the North American markets. Germany, for one, from a PE perspective, looks very attractive. But of course, we've got to consider the implications of the Ukraine-Russia war, relationships with China on the trading front. We'll take a quick break. When we come back, we'll pick it up on that note.